Hey there, welcome to CoinVantage, your go-to channel for all things digital money. We're diving into the cool world of cryptocurrencies where big stuff like Bitcoin, getting ready to launch, and the buzz around Ethereum is happening. We'll keep you updated on the latest news and tips, so get ready for a laid-back ride through the world of digital money with us. Let's get right into the video. The release of Bitcoin is just 2 months away, and the cryptocurrency sector anticipates a significant rise. An interesting fact is that 95% of historical Bitcoin buyers have made a profit if they held on to it. This is quite impressive. If you find these Bitcoin numbers fascinating, give it a like and share, and with as many people as you can. Bitwise, Fidelity, ARK Invest, and our other Bitcoin ETFs rank among the top 25 of all time. In just 1 month of trading, these 25 ETFs have already made history, covering 5,535 ETFs introduced in the last 30 years. BlackRock and Fidelity stand out with almost $3 billion each, leading the competition. These Bitcoin ETFs garnered over $400 million in net inflows as of February 9th. It is the third highest inflow day since their debut, starting at $655 million on the first day and peaking at nearly $453 million on the 17th. This is quite unusual, so take a moment to appreciate it. Compare their performance with regular ETFs and notice the exceptional demand for Bitcoin ETFs. The success of gold ETFs in 2004 is considered among the all-time greats, but Bitcoin's ETF is proving even more successful. Unlike gold, Bitcoin's supply is halved in a few months, preventing an increase in supply. If you agree, show your support by pressing the like and share buttons. Check out the graph depicting net flows of Bitcoin ETFs. The black line shows total net flows and the yellow dots represent daily inflows. Compare this with the daily inflows of gold ETFs. Keep in mind that GBTC is one of the 10 Bitcoin ETFs and the other 8 have quickly reversed their micro-strategy. The accumulation of Bitcoin holdings, which usually takes 2 or 3 years, was achieved by Bitcoin ETFs in just 1 month. Before ETFs, grayscale was the only option, but now BlackRock and Fidelity are also getting in on the action. It's an intriguing way of presenting data. The S&P 500 has never closed above 5,000 before, and with Bitcoin now tradable through ETFs and the correlation with stock market index, SPX is likely even higher. Furthermore, the stock market index, SPX, continues to set new records. The values of Bitcoin and other cryptocurrencies have risen sharply due to the Federal Reserve and Jerome Powell's efforts to maintain their policy stance during the election year, despite not asking for it. The increased awareness of the Bitcoin brand through ETFs is something we have always desired. What comes next? When will this situation conclude? There are future Ethereum exchange-traded funds in the pipeline, and those in Wall Street and traditional financial sector are expected to welcome them. Despite any opposition, these upcoming developments will proceed. According to an expert, if your investment portfolio lacks significant exposure to Ethereum, you may bear sole responsibility for any losses down the road. In my humble opinion, both Bitcoin and Ethereum, along with numerous other high-caliber cryptocurrency projects, are poised to achieve new heights this year or the next. The cryptocurrency market seems on the verge of explosive growth. At this moment, there's a substantial likelihood that those engaged in cryptocurrency could realize unexpected wealth. However, there's one crucial factor that could hinder this scenario. Before cryptocurrency attains widespread adoption in the US, it might overcome a final hurdle: the withdrawal of Digital Asset Anti-Money Laundering Act proposed by Senator Elizabeth Warren. Join me in making a difference by liking and sharing this post. Now you have a clear understanding of Elizabeth Warren's objective in the cryptocurrency industry. In a digital interview with journalist Rachel Wolfson, Harry-Ann Goring, CEO and creator of the Chamber of Digital Commerce, emphasized the organization's focus on promoting constructive regulation of Bitcoin and cryptocurrencies. She delves into how Elizabeth Warren's bill could negatively impact cryptocurrency and why it needs to be rescinded. Pay close attention. Contrary on what some may believe, the bill doesn't outright ban cryptocurrency use in the US. Instead, it specifies certain aspects of the crypto space under the Bank Secrecy Act, requiring adherence to the same financial reporting standards as banks. This includes self-hosted wallets, equating them to banks. The legislation also mandates financial reporting by Bitcoin miners and any type of node validator, treating them as equivalent to banks in terms of clients. This includes the requirement for miners and validators to report information that they may not even have access to. Essentially, it poses a backdoor ban on individuals engaging in node validation. This legislation is Senate Bill 2669, known as the Digital Asset Anti-Money Laundering Software. Exciting times ahead in the digital money world. Bitcoin's launch is around the corner, and I forget to mention that 95% 95% of past Bitcoin buyers made money. Ethereum is also gearing up for something big, but there's a challenge with rules proposed by Senator Elizabeth Warren that could slow things down. We need to pay attention and share this news. Join us at CoinVantage as we guide you through these changes. Like, share, and subscribe to make sure you don't miss any of our videos. Thank you for watching, and we will catch you on the next one.